morning and welcome to our monthly update from Dan White and Associates. We usually start with what's going on in the markets. We know last month the Fed had a bigger than expected rate cut. They cut by 50 points and the market loved it. And we're now at all new all-time highs. The market loves cheap money. But I don't think it's all rosy out there on the market front. I mean, they base everything on data, and the data, we had a jobs report last week and it was a blowout jobs report. I mean, it was really good. And so the government's thinking, are we going to pause rate cuts or are we going to continue with 25 basis point cuts? So it remains to be seen, but a couple things you need to know. September's blowout jobs report was based on incomplete data. Last month, payroll survey showed that just 62% of businesses polled responded on time, the lowest response rate in 14 years. This is down from 68% last September and 77% in the average September since 2010. In other words, last month's jobs report was based on incomplete data, and given that most reports over the past 2 years have been revised downward as more data is received, it's likely that this September's numbers will be revised much lower in the months ahead as well. That's another sign that the real economy, outside of areas being propped up by record government spending, is struggling. Brings me to my second point. This really isn't capitalism. Last week's blowout jobs report was entirely driven by the biggest government hiring spree on record outside of COVID-19. So whoever believes our economy is strong must think borrowing unsustainable amounts of money, printing money to pay for these loans, and then hiring people to do wasteful government jobs is the path to prosperity. It isn't. And we are on our way to a Soviet-like collapse in our economy as more and more of everything we do, including our jobs, is controlled by the government. And then the last thing I want to bring up today is I don't think we have inflation licked. It's still above 2%. It's above the government's target. And I think we might see another spike in inflation for a couple reasons. Number one, the dock worker strike. News broke last week that the dock worker strike was over, but that's not exactly right. Strikers reached an agreement to raise wages for now and renegotiate in January. Chances are the strike will continue then, as nobody currently has any good answer to the question of how we can promise not to increase the level of automation at ports, because we inevitably will. And any further striking, especially a prolonged strike, poses a significant inflationary risk. If the strike drags on for weeks or longer, it will hit the same sectors that proved vulnerable in 2021 and 2022: food, auto, clothing, and crops such as cocoa and coffee. Second reason I think inflation is going to spike is the Middle East conflict. Iran is the world's 7th largest oil producer. They play a critical role in global oil supplies. So if the war between Iran and Israel escalates and Iran cuts off oil shipments, it could trigger inflation similar to what we saw with Russia, although on a smaller scale. And then the last thing is lower interest rates is going to be inflationary. The Fed has begun lowering interest rates into a stock market at all-time highs with valuations at peak levels for this time in the cycle. These lower rates will encourage investing and spending rather than saving, especially among wealthy investors who are likely to see the returns from risk-free yield-bearing assets like money markets evaporate. So not only will these wealthy investors move their money, but really all Americans will be incentivized to spend when they can't get a good yield. This behavior will mirror the stimulus check effect, where people spent money they knew wouldn't earn strong returns in savings. And as a result, more money will be chasing fewer goods, and inflationary pressure, particularly in areas already stressed by supply chain disruptions. So, the market's at all-time highs. Everybody's kind of celebrating, thinks it's going to keep going, and there's some forces, perhaps under the water that people aren't considering. So, you got to be a little cautious. Second up, Google reviews from Middletown, Glen Mills, and Lewis. We appreciate everybody who's given us a Google review. I think we're up to 90 or 95 reviews, so that's fantastic. Our marketing department tells me that moves us up in the searches and all that kind of good stuff. So we appreciate that. If you have a Gmail account and you haven't yet given us a review, we'd appreciate it if you take the time to do that. Charles Schwab, there's going to be changes coming to our managed accounts. Our Charles Schwab account, we're transferring to a new wealth platform. You should be getting emails in the next week to 2 weeks announcing the change. There's going to be some DocuSigns you're going to have to fill out, and you're going to have to fill out a new risk profile questionnaire, which will allow the wealth platform to transfer you into a similar type of portfolio. We had a conference in September. The advisors here, myself, Allison, Dan, and Andrew all went to the American Equity Conference. It was a great experience. We found out some things about American Equity. They were just named by Newsweek as the most trusted insurance company in the world. So kudos to them. That's a big feather in their cap. And we also met Brookfield. Brookfield, as you know, took over American Equity. They purchased them last year. Brookfield has very deep pockets. They're committed to the annuity space. They're committed to making the products as competitive as possible. They have about $1 trillion in assets, so they've just really added a lot of capital to American Equity's balance sheet, which is a good thing. And lastly, it's that time of the year. We're having our annual pie drive-bys. You should have gotten an email to that extent. The one in Middletown will be November 7th from 2 to 5 p.m. in the afternoon. We're doing one in Lewis, a short one in Lewis, November 12th from 10 a.m. to 4 p.m. And then our big one in Glen Mills is going to be November the 14th from 9 a.m. to 12 p.m. and then 2 p.m. to 5 p.m. So when you respond, we need to know, what choice of pie. We have apple, pumpkin, and pecan from Serpy & Sons, one of our clients. Dominic's going to be doing all the pies. And keep in mind, we're also asking, we're going to give you a pie for the holidays, but we are collecting food for the shelters, and also we're a drop-off for Toys for Tots. So if you can remember to bring a little bit of food or a toy for a disadvantaged child, that would be great. Invites were emailed, and you can RSVP directly through the email or by contacting Kristen here at our office in Glen Mills. So that's kind of the update for the month. I hope everybody has a happy Halloween. The fall is here. The weather is getting a little cooler, which everybody enjoys. And the Phillies, unfortunately, they didn't make it. They didn't make the World Series and didn't even get out of the first round. So hopefully, the old Philadelphia mantra, there's always next year. Hope everybody has a great week.